Bank of Korea will release its new growth outlook for this year ahead of announcing its key interest rate on Thursday at the first monetary policy meeting of the year. Hwang Ji-hye looks at how much the central bank could lower its previous forecast.
3.2%. That's the forecast the Bank of Korea currently holds for the country's economy this year. It's in stark contrast with figures released by other major financial institutions that expect Korea's GDP to expand in the 2% range. And with the central bank set to announce a new growth outlook on Thursday, a downgrade in the current projection is widely expected.
Uncertainties stemming from the U.S. Federal Reserve's rate hike and instability in China's financial market, coupled with factors at home like the sluggish consumer sentiment, will dim the outlook for this year.
The focus is now on how much the central bank will cut from its existing forecast. Analysts say slashing it to the 2% range won't be an easy decision for the BOK to make, as it could further heighten uncertainties about slumping economic conditions among households and in the corporate sector. But with a trim looking almost certain this time, there are also rising expectations for another rate cut down the road, especially as Korea holds on to its strong economic fundamentals.
Except for the U.S. dollar, the Korean won is maintaining its stability against other currencies. Global ratings agency Moody's also viewed Korea's financial market as being relatively sound, and that means a rate cut won't lead to a major capital outflow.
Some add it's inevitable for Korea to jump into the so-called currency war with a rate cut as countries like China and Japan, Korea's major export rivals, try to drag down their currency values. Analysts say it could come as early as in the first quarter of this year if the economy fails to show signs of a strong recovery momentum. Hwang Ji-hye, Arirang News.